Hello, everybody. My name is Drew Dosek, and welcome to Trading the Close. Today, we had some data hit the markets as far as the JOLT job opening data at 10 o'clock this morning. It actually came in weaker than expected and also weaker than the previous month, implying not as many open jobs available. We do have the jobs report coming out on Friday. That will be a lot of important information for the Fed moving forward with these potential rate cuts. We did have a nice gap up today, but we did also see a decent drift lower until the last 30 minutes of the day, and then the markets are saving themselves. So let's jump into the market summary board, check out where prices are moving in the indices today. We see the Dow Jones basically flat, down 0.04%. NASDAQ now up 0.7%. S&P 500 basically flat at 0.1% gain. U.S. oil reversing most of its gains yesterday, down 2.58%. Gold is up 0.85%. Another all-time highs for gold. Great move for that. Bitcoin basically chopping sideways a little bit, still underneath that critical level that we've displayed on that parallel channel. Still having a decent day, up 0.85%. So let's jump into the S&P 500 heat map and see where all of these stocks are sorting out. We had great news come out for Google in Europe as far as any antitrust monopoly legal ruling in their favor, allowing them to keep Chrome. Another beneficiary of this was Apple, as Google pays Apple a tremendous amount of money throughout the course of the year to have all their search engines through Safari routed through Google. So Google does benefit from that through all the ad production and revenue that they gain from other companies providing advertisements on searches. So that was the big news of the day. We'll get into those charts later. But as you see here, kind of flat day across the board. AVGO, now they do report earnings tomorrow. They are up today 1.26%. Salesforce reporting earnings today up 1.73%. Tesla, nice pop, 1.74%. ExxonMobil and Chevron both down 2.38 and 2.53%. Philip Morris actually breaking down a little bit too, down 2.34% on the chart. Potentially a bear flag breakdown there on Philip Morris. Next up, we've got the S&P 500. So let's look at the 10-minute chart because we've really had some mixed signals over the last few days. As you recall, we did highlight the topping tail, bear flag yesterday. Then we had a cup and handle pattern here implying more upside today. And then today we had the gap up and really chopped around. The JOLTS data hit the market right here at 10 a.m. And actually the markets went higher off the weaker than anticipated job openings, but then quickly retreated, almost coming back down to gap fill before bouncing back up at the end of the day. So where does that take us? So basically, you can see here on the chart, this trend line is really what I'm focusing on for the near term. If we get price back up above this inclining trend line, then we can have price remaining in the inclining trend that you see here on the S&P 500. However, if we retest this area, there will be a lot of resistance there. We're talking about 6483 or potentially 6500, basically a pierce of that area. And to give you an idea of what to anticipate, we went through this yesterday. We showed you a chart on GEV. Look at this long-term inclining trend line and notice what happens when price breaks. It likes to come up and retest where it just broke. So at this current state, we're right about here on the SPX. The one thing that's different though, that I'm thinking we could actually still have probabilities to push higher. Notice on GEV, when we broke down here, we had a following day continuing that move lower, right? So that shifts probabilities when we have continued selling pressure through an area that would be support, in essence, breaking the trend line. If we flip back to the SPX, you notice here, we just had one day down. And then we're already back up. We didn't have two continual selling days down on the market. And every time prices breach this trend line, we haven't had a follow-up continuing sell day. We had a sell down here, with a bounce right back up. Here's one where price was saved by the end of the day. So this was the first day moving down underneath and closing underneath that trend line. Price didn't continue selling down. We're having the same scenario arise again today with price action moving up, closing higher than where price action was yesterday. So a little bit of mixed signals here. Normally a trend line break, we're going to have more price action be moving lower on the charts. I'm not getting that 100% confidence there of probability shifting heavily towards more downside because I didn't get that continuation move here. So we'll have to kick the can into tomorrow. That does not mean there won't be resistance around 64.80 to 6,500. Be watching that level for resistance and potential pullbacks in the near future. However, probabilities are a little bit more 55% of a pullback at this area instead of the 70% or 80% that I would anticipate had we had an additional sell day today. Next up, we've got the Qs. The Qs here earlier were having difficulties getting back above this inclining trend line. And you can see it was really done all in the last 30 minutes of the day here on the 10-minute channel here. The last 30 minutes, great green candles pushing back above this trend line. So that is positive near term for the Qs. We did test down under here with this sell pressure yesterday. Now we've bounced all the way back up, filling this gap, now establishing ourselves back above that trend line. So near term, slightly positive, about 52 to 55% probability we should continue moving upwards on the Qs. Next up, SMH really kicks the can into tomorrow. We talked about this potential head and shoulders pattern displayed on the chart. As most of the indices have already shown, we bounced up on the markets. We didn't bounce as high up on SMH as we did with either the Qs or the S&P 500, but this area and this pattern has not yet triggered, right? It will trigger when you see this dotted blue line that's rising on your screen when price action closes beneath that. If and when that occurs, the major move target of 259.50 is going to be the destination for SMH. Next up, IWM. IWM had a good day today, but not as good as the spiders, not as good as the Qs. You can see here, though, we're still chopping sideways in this consolidation form. All in all, IWM is saved. It's not done yet. We're still bullish consolidation, still has an opportunity to break through the immediate resistance, which has been weakened since we did tag it for 2 trading days just most recently. 236.63, keep that on the radar. Next up, Bitcoin. Notice yesterday I was talking about this, folks, how this 50% area of the parallel will be resistance and the next resistance, because that also corresponds with this big red candle. Today, price so far has been contained right here. We did pierce ever so slightly above that 50% area. If I zoom in on the chart, you can see that we got above briefly, but have since now retreated back down, currently trading $112,200. That area on the 50% area to breach today is $112,454, and it will increase ever so slightly to tomorrow. Now, remember, Bitcoin and cryptocurrencies close at 8 o'clock Eastern time at night. So be watching tonight where price closes. Immediate resistance is still here at the 50% area and this red candle. We'll see if price consolidates over the coming days or if we get a rejection at that area. Next up, gold. All-time highs again. Look at this beautiful march up on gold. It is getting overextended in the near term. The likely destination for the next area of resistance is going to be up here at 36.2120. Then I would be watching for a pullback on gold, potentially to this horizontal trend line right here at 34.38, potentially as low as this declining trend line. But you got to give it to gold. While there's uncertainty in the markets and a potential sell down, especially with jobs openings weakening, people are rushing back into gold. Tariff uncertainty, again, just more uncertainty. People are going to be attracted to this yellow metal here with gold. Next up, silver. Man, great move on silver. I thought this resistance of 41.66 wasn't going to get tagged at least for a few more weeks. But man, we're right up here, very close to it. The high today got up to $41.46, only 20 cents away from the significant resistance level. Considering that we've moved up in this vertical fashion, should we tag that tomorrow? I anticipate a pullback down here to this inclining trend line right about $40.19. Next up, U.S. oil. Look at this, reversing most all of the gains yesterday, basically Xing out yesterday's price action, still putting us in bearish consolidation, folks. I know a lot of people have been commenting, saying otherwise on these videos, but you know what? I just tell you what I see in the charts. The charts are telling me bearish consolidation. You can flip to the weekly. It's still the same thing, folks. It's still a move down, bearish consolidation, a move down, bearish consolidation. So until this pattern changes, that's where the charts are telling me oil is likely to go. Be watching here on this declining trend line. Will likely, since we are somewhat little bit of extended move up, We'll likely catch a little bit of support here at 61.90, still anticipating price to come all the way back here to this declining trend line. Remember, this was a pseudo inverse head and shoulders pattern on the chart. And much like the chart of Bitcoin, you see here with this inverse head and shoulders pattern here, price went up, came back and retested. That's the same sort of pattern I'm watching here on the US oil chart. It's just we've caught support slightly before this declining trend line, which was the previous neckline of that pattern. Next up, we've got Nat Gas. Nat Gas, nice push higher today. You see the last few days we established above this $3.02 support and / resistance level. Now that we have pushed higher, this area will be support for any sell-off on Nat Gas. But the immediate destination and resistance for Nat Gas is going to be on this inclining trend line right here, roughly $3.29 to $3.30. Next up, 10-year yield. Look at this, guys. I know we've watched this development of this bear flag here on the 10-year yield, but today we actually had the 10-year poking beneath this inclining parallel channel. Still, to the end of the day, it was saved, but we'll watch tomorrow. Notice the consolidation that's taking place right here on that parallel. That does imply this bear flag should play out with a move down here to 4.095%. Next up, Macy's. Now, we're going to touch on this quickly. You can see here, Macy's had a fantastic earnings report. Yesterday, I was talking about this inclining trend line and this declining trend line as being resistance and support should price move in either direction into it off the earnings call. And you can see here that price on this declining trend line, roughly about $14.24. If I zoom into the 1-minute chart, and I've got extended hours on, we go all the way back here. You can notice at $14.24, price action immediately reacted to the earnings news, popped up, went as high as $14.60 before reversing course all the way back down here to $13.80. That would have been the quick area for a trade. And then after that, up, and away Macy's went. Beautiful move on Macy's, as you see here in the daily time frame, tagging this gap fill here over back from January 7th. Caught resistance and a significant fib retracement level is right here at $16.35. So whenever you're breaking out of a declining trend line, you want to see price in essence, in best case scenario, you want to see a smaller break. You don't want to see a big break like this because this is extending the price on the chart. Now for this move to be have further probabilities behind it, we need to see another follow-up move like what I was talking about on the SPX when it was breaking down. We need to have another follow-up move. Then all sorts of buying opportunities are presented with any sort of pullback on Macy's. Watch price action tomorrow to see if we get any sort of continuation move. And then in which case, this declining trend line will be optimal buying scenario right down here near $14 on the chart. Next up, Palladium. We haven't covered Palladium, and I wanted to do so. I've seen some comments asking for those in our shows. And guys, feel free. Let me know if I can fit it into the show. I'm happy to go over some of these charts for you. I know each and every one of you have got some favorite plays that you have, and I may or may not touch on them. So please send me a comment. Put a thumbs up and like. I'm happy to go over charts with you. This is my passion. This is what I love to do. And I will spend most of the day doing this if I didn't have any other responsibilities. All right, regardless, back into Palladium. So here we are with Palladium on the daily chart. You notice here, first off, we've got a topping tail up at the chart, which is implied downside momentum in the near term. That's already been accomplished. Look at that sharp sell-off on Palladium. I scroll back out on the chart and notice price since 2024 has been contained in an inclining parallel channel. Now, price action today did a great job getting back above the 50% area of that parallel. You can see when price finally broke down under, it attempted several times to get back over the 50% area, and it finally did so today. What we want to see tomorrow, if you're a bull on Palladium, you want to see a move up above that. That will create support on that 50% area, which is currently at $1,000 or $1,138. That would then clear the way for a move up to the next significant resistance. Now, there will be stops right around 1181 where these pivots come down. That will be resistance. And then up here at 1246.25 will be the next significant resistance. But most importantly, notice on this parallel channel, whenever we have price action contained underneath, it's likely going to stay under this area until we break out to the top half of the parallel channel. That's what price is trying to do now. Also notice on Palladium, we have higher lows on the charts. Here's a low pivot, here's a low pivot, and then here's a low pivot, all of which are higher lows currently on the chart for Palladium. Very positive in the near term for it, because if you look back out, we're way down here on the low end of the chart of Palladium, have been much, much higher before, over 3,300. So this is a great buying opportunity for Palladium down near the bottom of the charts, especially when price is trying to bounce back up, establish itself in the top end of this 50% area of the parallel. Be watching price action tomorrow for a move higher. If so, you have a buying opportunity there. Otherwise, sit back, wait. The support levels at 1,047, followed by 967, could potentially get hit if we do not establish ourselves back in the top half of this parallel. Next up, Google. Google, as you see here, did rip higher off of potentially not splitting up some of their business with that legal news coming out of the European Union. As you see here, Google was trading for the most part in this inclining parallel channel. Now, through March and April, we breached this area, and Google fought very hard to get back into this area. It didn't excel up as quickly as some of its other competitors in this space, mainly because of the ad revenue that might get stripped from Google if a lot of people are starting to utilize AI for their searches online. They're bypassing all this ad revenue. So today, it's almost like that news is ancient history, and the price of the stock ripped higher, now pushing price above this inclining parallel channel. Same thing here. We'll need to see a follow-up move tomorrow. If we do so, we do have resistance not far away, as you see right here, 233.59, and then this top end of the parallels right at 228.97. Those are the two critical areas to watch for Google in the near term, because any sort of retreat back into this parallel could pull price all the way down to this inclining trend line right here. That price, as you see here, when it did break above it, it took many attempts to do so, and consolidation. We broke, got rejected, then broke again, got rejected again, came back up, consolidated, broke out, then retested, and ultimately got that bounce. This area of a trend line will catch support should Google end up falling back down. And you can see that extends out, gets higher, the longer time takes to get there. So roughly about 214.85, basically the pivot high, which was a previous high for Google. All right, next up, Apple, very similar situation, big potential boost in investor sentiment here, nice push up, but we notice Apple is forming an inclining wedge on the chart. Next major resistance at 240.65, which also corresponds with this inclining wedge that you see here. Now notice also, I've got levels of resistance and a measured move all the way up here, 257.82. This measured move is derived from this bull flag that took place on the chart of Apple. This nice move up and sideways consolidation, that generated a measured move potential all the way up here to 257.82. If I scroll back out on the chart, look how that kind of makes sense, folks. The all-time highs were back here on December 26th. And this measured move is not that far underneath the all-time highs. So Apple is projecting a potential move all the way up, very close to all-time highs. Got a few levels to get through first, but at least this pattern is now breaking to the upside above these pivots, triggering this bullish pattern to move. Next up, Texas Instruments. Now, Texas Instruments had a decent drop down today in the middle of the day and really put pressure on the SMH and the SOX. You can see here from this trend line extended from pivot to pivot, cut through this price action. That's exactly where price stopped and ultimately rebounded today on the charts. But notice we've now tagged this trend line several times. So that tells me the next hit, we're actually likely to break and come through that trend line. Next area of support, should that happen, is 188.49, not that far away, and that's derived from a longer-term trend line that you see here back in February of 2024. So be watching that area if you are a bull on Texas Instruments, as that would be the next line in the sand, followed by a very significant level of support down here at 171.20. That's where it would be more of a Goldilocks zone, more of a conservative area to enter should this trend line break, as now it's being tagged many times. But I have to say, the bounce up from this area was certainly impressive. You can see here on the 10-minute chart when price came straight down into it, and that got a beautiful bounce up. So very neat to see. This area will be a contention for TXN tomorrow, right at 196.75. Into Reddit. Reddit, we see here on the chart, we did actually have a very positive move for Reddit earlier in the day. Once it breached this candle, all the selling pressure came running right back into the stock, pushing it right back down. But look at this pattern on the chart. Don't pay attention to this wick. Pay attention to the closes. Where does this pattern and what does this pattern display to us? This is a bear flag right here on the chart, regardless of this test wick that took place up here on the day today. But this pardon me, this bear flagged measured move has the potential to pull price down on Reddit under $200 down to 192.74. That also corresponds with this inclining trend line that you see here on the chart. Should it break there, the next level of support is going to be 181.78. That also does correspond with the 50% area of this inclining parallel channel. Next up, we've got Marvell, MRVL. Now, notice here, we did have earnings recently on Marvell, double miss on earnings per share as well as revenue. But the reaction from that was a big drop down in price action. And since then, it's just been sideways consolidating. Notice, though, where price stopped. Even though we breached this area here in April, Marvell has been trading in an inclining parallel for really several years now, since 2021, reaching the top and bottom ends of this parallel channel. Currently catching support right now at the bottom end of this parallel channel. Should that break, the next area supports 55.26, followed by 51.24. And folks, notice this is going to be a pretty significant low level on the chart, which also could be a great buy-in opportunity, especially when you consider this long-term trend line coming from the COVID lows and connecting over to the pivot here in 2023, and then the pivots that we've just discussed in 2025. That area down here, 51.44, that would be a great area to scoop up some Marvell. All right. Lastly, we've got Campbell's company. Now, earlier in the day, we did actually have, even though we gapped up, we had some selling pressure, pulling the markets back into almost the flat lines before rallying towards the end of the day. Notice Campbell Soup did have earnings. They did beat on earnings per share, but they did miss on revenue. Yet the stock pushed up above this bullish consolidation, now triggering a potential bull flag measured move up to $35.25. So be watching for a follow-up move tomorrow, especially if there's any more pressure on the markets. Campbell Soup could be receiving an inflow of capital simply because this is more of a defensive play when growth stocks are starting to correct. All right, guys, that wraps up Trading the Close. My name is Drew Dosek. Thanks so much for tuning in. I'll be back here same time tomorrow with a lot more charts to discuss the new price action that occurred tomorrow. Thanks again, and I'll see you guys on the charts.